Everyone, Paul here. Today I'm going to go over the same strategy that I talked about a couple days ago, where I showed you how to use your RSI to make it pretty much scalp the market during the option trading, and how to make money really from the option trading and kind of scalp your way through the day and make some money doing it that way. Today I'm going to show you the same strategy, but we're going to look at it on the 1 hour time frame. And this strategy is meant for those that want to hold longer. I mean, for this to work, for it to get the good gains, yeah, you'll have to hold. You have to extend your contract longer. That's really the only difference about this. So we're just going to go and look at SPY real quick. And I'm probably going to keep this video pretty short, because if you want to know really how to do everything, just watch my last video. It's pretty much the same thing. We're going to be doing it on the hour instead. So to set everything up, really all you need, I have my 1348 EMAs, and I just look at that because I don't want my screen just to have just candles on them. But I find that if I'm not using the RSI strategy, I refer to the 1348 crossing. But you definitely need your RSI. So what you do and what I do is I just change my RSI upper band to white with the line and make it a little bit thick. The middle band I have red, and the bottom lower band is white with a line. They all have lines on them, and they'll look like this. And I got rid of the little purple background, so it looks more. You can see it better, in my opinion. I mean, you can't keep it like the default setting, but anyway, we're gonna look at this on the hour. We're gonna find a couple spots. Now, if you guys don't know the strategy that I talked about in the last video, the first thing you need to look for is you really need to put your focus on the RSI. The first thing you need to focus on is the yellow line. The yellow line down here. You gotta focus on the yellow line in the RSI. So what you want to look for with the RSI is you need to see when the yellow line is touching the top or it's touching the bottom. Those are your entry points doing options. So what you want to look for first is the yellow line being as close to the top or bottom as possible. When it's at the top, you're going to be doing a put. When it's down at the bottom, you're going to be doing a call. So your entry point is whenever it is close to the top or the bottom, and you see the purple line going through it. That is your entry point to get in for a option. It doesn't work all the time, but it works most of the times. It's pretty effective. So let's just find a moment on the hour to where this works. Okay, so right here we see the yellow line is pretty much touching the top. You see the purple line going through. So this would be your entry point. So we would do at this point a 402 put. We would do a 402 put. So we basically get in right here where the purple line starts going through it, and we just write it out. Now, as long, come on, where'd it go? Okay. As long as the purple line is below the yellow line, you're in profit. And it's the same thing for on the bottom. As long as the purple line is above the yellow line, when it's on the bottom, if it's above the yellow line, you're in profit. So when it's at the top, it has to be below it. If it's on the bottom, it has to be above it. So let's look at this strategy here. So we would get in at this point. It would be a 402, 403 put. And we just write it out. While we have our position, we look at the purple line. And as long as it's still going down, we're in profit. Now let me just see here. I'm going to try to get the absolute profit of what we would do in this trade. So we start here, and we would look at the purple line, and we'd exit right about here. We'd exit right here. So this is a little over a day, and there was about 856. There was a difference of 856 in price. And so that one was about, that's $428 in almost a day. One day. So let's look at a couple other examples. I'm going to do this a couple times. So what we want to look for is an example of the, well, right here we see the yellow. It's not all the way touched. It's close enough. So what we want to look for is the yellow line almost touching the bottom line, and we need to see the purple line going through it. So we would come in right around here. We would do a 394 call at this point. So right about here, and then we would just look at the when our trade is in motion, we would look at the purple line when we would know when to get in and when to get out. So we just wait it out, and you could sell here or you could sell about here, because that's about where the purple line starts to end. This one was, oh my God, this one was a difference in price of $13. Oh, gee, where'd it go? Okay, well, I lost my spot. But anyway, that was about, it was $13 difference in price times 50. You made $650 in, I think it was a day. So let's just do this a couple more times. And I think you guys get the general idea. Let's see, let's find a moment. Okay, look at this one right here. Let's look at this one right here. We see the RSI with the yellow line way above the line here. So this would be a good entry point. We see the purple line going through it right about here. So we would enter right about here. This would be a 399 put. And we would just look at the purple line while our trade is in motion and get out right about here. This is a difference of price of $8.53 in 2.5 days. $8.53, $8.53. So that is $426 in 2.5 days. $426 in 2.5 days. Now, you could do this different ways. You can do this, now with one contract, that's how much you would make. With 2 contracts, that would have been $800. So let me do this 2 more times. And then I think you guys get the general idea. So right here, we see the yellow line. It's almost touching the white line there. It's close enough. So this might be, no, it's not market open. I thought it would be market open, but no. We would come in right about here. We would do a 394 call right about here, and then we would just watch the purple line. Hold on. Here, let's see, move that. Okay, let's do this again. So right about here, and then we just watch the purple line. The purple line will guide you of when you need to get in and when you need to get out. So this was $13 difference in price in about a day. $13.06 times 50. They made about $653 in one day with this move. Okay, so let's do one more time. Let's do one more time. We gotta look for, now when this is going on, when the trade is actually going on, it'll be kind of like this. Well, it won't be as much doing it by the hour, but you'll just basically wait for the yellow line to reach its point. So let's find one. So right about, let's do, this one probably won't be as big, but let's just look this one anyway. Let's do this moment here. So this would be a 357. This would be a 357 call. So right about here, we would come in and we would just write out the, now this This one, I have another thing that you could be doing when you're doing this is you could also be looking at the trend of the yellow line. While it's important to look at the purple line, but if you also see that the yellow line is also moving up, you'll know that the candles are eventually moving up too. So if I saw that, I would wait till about here. And that is in 2 days, $8 difference in price. That's about $8 difference in price. So you made about $400 in 2 days. So you can easily make over $100 with this strategy. You do have to extend your contract because you don't know how long you're going to have to wait for these candles. So I would buy probably weekly contracts for this strategy. That's just my opinion. But anyway, if you found this video helpful, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.